Imagine walking into an auction where one of the most valuable companies on Earth is finally available to the public. The room is packed. People are cheering. Financial media is calling it a historic moment. Investors are rushing to buy before the price goes even higher. Now imagine that while everyone is focused on getting in, the people who built the company, funded the company, and owned shares for years are quietly watching the exits. That's the part most investors never think about. Today, SpaceX became a publicly traded company, and for many people, this feels like a once-in-a-generation opportunity. After all, we're talking about a company that transformed the space industry, built the world's largest satellite internet network, and became one of the most influential private businesses ever created. The story is powerful. The technology is impressive. The future seems limitless. But investing isn't just about finding a great company. It's about understanding the deal you're being offered, because history has a strange habit of teaching the same lesson over and over again. A great company can still become a disappointing investment when investors ignore the details, and those details are usually hidden where almost nobody looks. Not on social media, not in headlines, not in price charts. They're buried inside the structure of the IPO itself. Today, millions of people are watching the stock price. They're asking whether it will rise 10%, 20%, or even 50%. But that's the wrong question. The better question is, what happens after the excitement fades? Because IPO day is often the easiest part of the story. The difficult part comes later, weeks later, months later, when the market has to deal with something far more important than hype: supply. Here's what most investors don't realize. When a company goes public, almost all of its shares don't suddenly become available for trading. Only a small portion enters the market. The majority remains in the hands of founders, employees, executives, and early investors. Those people can't immediately sell because of lockup agreements. Think of it like opening a stadium with only a few entrances available. At first, everything feels controlled, but as more gates open, the flow changes dramatically. The same thing happens with shares. The more shares become available, the more selling pressure can enter the market. And SpaceX has structured this process differently than many traditional IPOs. Instead of one major unlock event, there are multiple stages where additional shares can become eligible for sale. Every stage matters. Every unlock changes the balance between supply and demand. And if there's one law that never disappears in financial markets, it's this: prices are determined by supply and demand. Not excitement, not headlines, not social media trends. Supply and demand. That's why understanding who can sell is just as important as understanding who wants to buy. Now here's where things become even more interesting. SpaceX included provisions that can accelerate certain insider unlocks if the stock performs strongly after going public. Think about the irony. Most investors see a rising stock as proof that everything is going according to plan. But under this structure, a powerful rally can move additional shares closer to the market. The very thing investors celebrate can increase future selling pressure. It's like a party that becomes more crowded every time the music gets louder. Eventually, the room reaches capacity. The question isn't whether SpaceX is an incredible company. The question is whether investors fully understand the mechanics surrounding the stock, because markets are filled with examples of businesses that were genuinely impressive while their stocks struggled. A great company and a great investment are not always the same thing. Timing matters, valuation matters, structure matters. And that's where many investors get caught. They spend hours researching products, hours researching leadership, hours researching future opportunities, but almost no time researching share structure. Who owns the stock? When can they sell? How much can they sell? What incentives do they have? Those questions rarely go viral on social media. Yet, they're often the questions that matter most. History gives us countless reminders. Again and again, investors become excited about a major IPO. The stock rises, media attention increases, optimism spreads everywhere. Then months later, insider lockups expire. Large shareholders gain the ability to sell. Supply increases dramatically. And suddenly the stock faces a challenge it never faced before. More sellers, more competition, more pressure. That's enough. This is why experienced investors often spend less time watching the opening bell and more time studying the calendar, because the calendar doesn't care about emotions. The calendar doesn't care about hype. The calendar quietly moves toward the next important event, the next earnings report, the next share unlock, the next institutional buying window, the next piece of information, and every event changes the picture. There's also another force working in the background: passive investing. Today, trillions of dollars are managed by index funds and ETFs. These funds don't make emotional decisions. They follow rules. When a company becomes eligible for inclusion, those funds may begin buying automatically. That creates demand that has nothing to do with excitement or opinions. It's simply money following a formula. So over the coming months, SpaceX could experience a fascinating battle. On one side, more shares become available through unlocks. On the other side, institutional demand may increase as funds adjust their holdings. The future stock price will depend on which force proves stronger, and that's exactly why predicting short-term movements is so difficult. There are simply too many moving parts. This brings us to the most important point of the entire discussion: patience. Patience is probably the most underrated advantage in investing. The market constantly encourages urgency. Buy now, act now, don't miss out, last chance, limited opportunity. But some of the greatest investments in history rewarded people who waited, people who gathered information, people who allowed excitement to cool, people who focused on facts instead of fear of missing out. Over the next several months, SpaceX will begin building a public track record. Investors will see earnings reports, financial performance, management guidance, market reactions, real-world results, and with every passing quarter, uncertainty will slowly be replaced by evidence. That's valuable because evidence is far more reliable than excitement. So if you're looking at SpaceX today, don't focus only on the stock price. Look at the structure, look at the calendar, look at the incentives. Ask yourself what information is still missing. Ask yourself what events haven't happened yet. Ask yourself whether you're investing because you've done the research or because everyone else seems excited, because the difference between those two reasons can be enormous. At the end of the day, the biggest lesson here isn't about rockets. It isn't about satellites. It isn't even about SpaceX. It's about learning how markets really work. The headlines tell you what people are talking about. The mechanics tell you what can actually happen. The headlines are loud. The mechanics are quiet. But in investing, the quiet details often create the biggest outcomes. And the investors who consistently succeed are usually the ones willing to study those details while everyone else is watching the crowd.